Good morning, traders. It's 8:03 a.m. Chicago time, coming at you from the Windy City. It's 9:03 a.m. East Coast time. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we have a mixed market. The Nasdaq's leading the pack, of course, up 44 points. Nasdaq got as high as 59.4750. Since yesterday's pit close after the Apple earnings. We'll go over that in a minute. Followed by the Dow Jones. The Dow's up 46 points or 0.21%. The laggard this morning is gold. Gold, however, has hit a 7-week high. It has not been at these levels since about June. Gold's trading at $1,271.30, down 0.63%, followed by the yen. So the safety products are generally down this morning. The 10-year notes down. The Treasury bond is unchanged from yesterday. The Eurobond is down. But we have a mixed bag coming into today. The Russell is lower by 1.4 points, which is basically a one rotation in the Russell. So it's really relatively unchanged. That's where we stand right now. The news flow overnight, global manufacturing is looking pretty good. The global manufacturing grew for the 17th straight month in June and July, up 0.1 points to 52.7, according to the market manufacturing purchasing. There's news on Bitcoin. There's a second split that's being contemplated. And then, of course, Apple reported yesterday. Apple came out with Q3 1.67, $1.67 versus $1.57, beating by 10 cents. Revenue at 54.4 or 45.4 billion versus 44.7, saying that sales are pretty strong, increasing production capacity for the AirPods. But overall, very, very bullish. Apple put in new all-time highs and are continue to be strong this morning. Lots of good news out of there. So overall, the comments from Tim Cook, the CEO, are very, very positive and are encouraging the market. Remember, this is Apple's the biggest component across many different many different indices. Overnight, we also got the July ADP employment change. If you recall, ADP is a private payroll service company, and they release their payroll employment numbers before the non-farm payrolls, which are coming out on Friday with unemployment. ADP reported 178,000 versus 190,000 estimated, so it missed. Revised prior higher from 158,000 to 191,000, which to me seems like a pretty big adjustment. They're saying that at this pace of job growth, unemployment will continue to quickly decline. And then as far as what we're expecting for today, we're simply looking today. It's a pretty clear deck. We did get some numbers overnight, but you can look those up. Today, the only thing that's left is the 1030 crude oil inventories. We're expecting a draw of 3.3 million. Recent surveys have shown that crude inventories are higher than what's expected. And so crude has been correcting to the downside. But crude oil today is expected with a draw of 3.3 million barrels. Distillate inventory is expecting a draw of 950,000 barrels. And gasoline inventory is expecting a draw of 1.226 million barrels. And then the only thing remaining beyond that is Fed Speaker Mester at noon Eastern and Fed Speaker Williams at 3:30 Eastern, just a half hour before the cash close. Let's take a look at what we expected yesterday versus what we got. I got to tell you that it's been interesting and a tougher call these days. The market's auctioning very well. It's testing day levels pretty consistently. As we saw yesterday, it pushed down to value low of the prior day, um, the value low of Friday, and rallied from there before it sold off on pretty good volume on the close at the end of July, the last day of July. The expectation yesterday was for the market to drift down and then find its impulsive buyers. The market, to me, looks like it is ready to push higher. Given what we've done for the last couple days, has been consolidating pretty consistently. So the expectation was for a rotation higher, a push into 78, a push through to new all-time highs, and then to settle around the 78 area where balance, where the top balance is. That did not happen yesterday. Hypo 1 did not fare very well this week. And the good news is we see that pretty early. We see pretty early which of these hypos is you can throw out. Hypo 2 was a tight consolidation with buyers just dominating the move or dominating the auction and pushing higher. We're looking for an excess low to be put in and a P-shaped profile in the 2485 area. That did not happen at all. Again, these hypos are based on the context, and the context is for the strong consolidation for the market to have its energy, seems to have its energy at this point to continue to push higher relatively easily. And so that leaves us with the third hypothesis that we covered, and that is responsive selling down into the prior range, a consolidation inside of the prior range. If anything, we would get a test below the prior range low, taking out the overnight low. At 24.65 and a quarter would be the test area, and then finishing somewhere in the middle, closing around 24.72. This is not exactly what happened. It's the closest approximation, though. This is what happened here. A push lower, so we get the impulse down, and then the market just continues to push lower. Notice again we test a day value level. Yet again and hold. We tested the point of control by about 2 ticks and held. We had some pretty good impulsive moves to the upside, but the market just could not follow through. Um, you know, part of that is the anticipation of Apple's releases. It's hard to take a position since Apple's such a big weight in this index as well. The market just went completely dead and sideways into the close. I mean, it was a horrible 2-point range um, from about noon Central, 1 Eastern, all the way to the close at 3 Central, 4 Eastern. That's pretty rough going. Notice that the profile has some pretty high kurtosis, very sharp. Again, consolidating. This indicates that movement out of here is likely to have some pretty good energy as more and more trading occurs at a smaller and smaller range. What you have is more and more people with tighter and tighter stops that are likely to fuel the move once we move out. Something to note yesterday, 815,000 contracts traded, really low volume, about 300,000 light, about 25% off of what we would consider to be normal. So overall, it just seemed to be a typical summer holiday trade right now. We are on the 1st of August. A larger proportion of those who will participate in the financial industry are likely to be off throughout this month before we kick back in and start our fall trading session. I think that traditionally this month is acting in line with um, normal expectations. We were spoiled in the last couple of years as we got uh, the China move in 2015. We got the election news and news flow and expectations in 2016, and now 2017 we're back to normal. We're trading pretty much where we would expect to be at this time of year. So overall, holding Here we held value low, here we held the point of control. We're holding, and we are continuously trying to push higher. We made an equal high, higher low. One time framing continues to be to the buy side on the day session. And then when we look at the, let me pull up. When we look at the weekly, we're still holding higher lows, higher lows. So on the weekly, we're in line with one-time framing up as well. So you can see the gold on this chart here. The gold is Monday, and then the whatever this is, purple or whatever, is Tuesday, and you could see the flow here is pretty good. We sold off pretty good on Monday from the open and from the high of about 24.7550. We sold off again from there. We opened in the same spot yesterday and sold off from there immediately. We keep rejecting this upper distribution from last week and the HVN and the naked point of control from Thursday. We keep rejecting them, but then we return to them later in the session. The market is rejecting these prices early and coming back fairly quickly within the session. The expectation is it's likely to break, but the overall trend, we're one time framing up on the weekly and the daily. The strength is still on the buy side, in my opinion. We're just simply not getting the energy to continue to push higher. Looking at the overnight, let's switch just to 15 minute. Looking at the overnight, same old, same old. We've had some pretty decent moves in the overnight, like yesterday. The last night's session, however, was completely quiet, even through the European Open right here. We remained fairly quiet and trading sideways. Volume is in line at 142,000. Normally, we expect somewhere around 130 to 150,000, so it's right in there. So overnight volume is pretty tame. We're holding, again, we're holding above yesterday's range, and the expectation remains the same. Keep talking about the same thing every day, unfortunately. But this is where we are again. We're opening. Here's the open Monday. Here's the open Tuesday. It's the dotted green line is the open of that session. And guess where we are? We're opening around 24.75, 24.7450 yet again. So in my opinion, again, open auction, test lower, impulse up. Okay, it just isn't happening, but this is hypo one. It's been hypo one for 3 days. Impulse up, pull back to the OS high to mid, continuation to 78, push through 78, consolidate and finish somewhere in the 78 area. That is hypo one. I'm looking to the upside. It just doesn't seem to be ready to do so. We had the interference over the last couple of days of the end of month, the end of July, the first day of the month yesterday, but there's really no excuse for the market to not continue higher today and push through, finishing this pattern here, this consolidation, this bullish consolidation pattern. I expect it to continue higher today. That is hypo one. Hypo two is an immediate push higher that gets its fuel early, pushes through to 78, consolidates, finally pushes through to 80.50, potentially getting to 82.50 or so, and then finishing somewhere in the high volume node. That is hypo 2, also very bullish. Again, hypo 3, open auction, tests higher, move lower, consolidate, and then make an attempt higher later in the session. So that's hypo 3 for you. Okay, so that's what I'm looking at. It seems like I'm repeating myself every day, but then the action is still doing the same thing over and over and over. So there you have it. Good luck today, and I'll catch you tomorrow. Take care.